You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, Brandon. How are you doing?
Hey, mate.
This week we got a new COVID variant, so that's exciting.
Oh, yeah. No, I haven't really been following the news. It sounds like it's kind of early on. That kind of not many people really know how bad it's going to be, or that sort of thing. We're kind of just in that. Remember, like the initial phase of COVID, where we're all kind of were worried, but we didn't actually know how bad this thing was going to be, or what our lockdowns should be, or that sort of thing. We were just kind of testing the waters. It kind of feels like a little bit of that, but to be honest, I don't really bury my head in that sort of news anymore because I'm just so over it.
Yeah, it's crazy how quickly the media just jumps on the fear mongering for it. Like it's literally, I think, even a couple of days ago, there was only 100 cases or something, all in South Africa. And I remember there was just news headlines concerned that it was going to be much worse and all of these things. And there's really no evidence of that so far. I think we need like a couple of weeks of data or something like that before we'll actually know. So, but it is funny. The media is just like, just jumps back on it. I mean, for the past like very long time, that half of the hour news has just been COVID. So
crazy.
Over the past couple of weeks, I'm sure Australian news has just kind of been like, crap, we have to actually talk about other things. So
yeah, that's one thing actually. How easy has it been to be like somebody that writes or plans the news segments? Yeah. It's just like, oh, this is the easiest job ever. Just talk about COVID for half an hour first, and then, I don't know, something happened in sport. I think we can cut to sport. There's probably some cricket news, but then if we need to, we'll just talk about COVID a little bit more. All right, great. Well done, guys.
Pretty much.
Good session planning.
Yeah, the sports segment is pretty straightforward. They always have the weather that goes for 5 or 10 minutes, and they have COVID going for 20 minutes. What's even left? There's like 2 stories. They put that fluff piece about puppies up for adoption or something, and then that's the whole hour.
Breaking news out of the US as the election results come in, but actually we've got to stop it there because we have to talk about COVID.
Hang on, there's been another case.
No, I don't know. Hopefully this is not a bad thing, but honestly I can't really talk about it at all because I just haven't been paying attention to it.
Yeah, all I know is that there was a significant so like they I don't know much about this, but they look at the virus and there were 30 mutations on this variant, which is apparently a lot. So that means that there is a chance that some of those mutations will stop or limit the effectiveness of vaccines, or could change other things like the transmissibility or how deadly it is. So I think that's why there's kind of, even at the early stage, a little bit of extra fear around this because it has mutated so much. I think that's kind of why. But what that actually means as an outcome, we have no idea yet. We have to see many more cases, I think. So we'll see. I think I saw a headline that Moderna had already said that they can get a vaccine for this variant going early next year, which is kind of funny. Moderna just trying to get out ahead of it. We've got one.
Press release. Stock goes up 20%.
Yeah. Governments around the world sign a contract with us, even though we don't know if we actually need a new one.
Stock goes up 20%. They raise capital, and then they fund their actual vaccine program with their raised capital.
Yeah.
Buy back stock, pay a dividend.
Rinse and repeat.
Increase remuneration. Yeah, rinse, repeat. Oh, dear. All right, what are we talking about today? Oh, we got a follow-up from this is actually hilarious, this follow-up from the Fed that I'm going to talk about, because it's pretty much exactly what we said last week actually happened. And then what are you talking about today?
Bit of news out of two of Jack Dorsey's companies. Well, I mean, the news is kind of around Jack Dorsey, but around Twitter and Square. So a little bit of news around that, and some other board-related news as well. That's a little bit less important. But
and then I'm talking about SpaceX, and a new study shows the most expensive city to live in, and it's probably not what you think. I was very surprised. But yeah, lots to talk about. Should we get stuck into it?
Yeah. Today's episode is sponsored by ShareSite, which is an application you can use to track the performance of your stock portfolio. So basically, it will allow you to keep track of all of the different types of gains, capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So ShareSite generates up to 12 different reports that can be used to track performance and use that tax time to work out things such as capital gains, dividend income, and more. And at the moment, you can try ShareSite for free by heading over to sharesite.com/younginvestors. That's site spelled SIGHT, sharesite.com/younginvestors. So you can use that link, sign up to a free plan, track up to 10 holdings for as long as you want. Or you can also use that link to sign up to a paid plan for premium features, and you can get 4 months off a yearly subscription if you use our link. So go check it out if you're interested, particularly for those who are in North America and your tax time is upon you. Could be time to get your stock tax affairs in order, and you can use ShareSite to do it.
Yes, absolutely. Also, Movember, we finished.
Yeah, we did.
We did it.
We did.
Nice.
Well, have you
shaved?
I have actually.
Yeah, me too.
I was. I couldn't shave. Honestly, I shaved still in November. I shaved at about 11 p.m. on the 30th of November. So, I was. Technically, I breached the rules.
You failed.
I failed. Oh, damn it.
That's all right.
What does that mean?
Resets.
What is it?
Resets. So now on the 2nd of January, you're going to. That's the next time you're allowed to shave. So sorry, mate. Jeez, you came that close, but now you have to do it all again.
Damn it.
No, but we did really well. Team margin of safety, we ended up raising $6,105. I mean, people can still donate, but how good's that? That's pretty impressive.
Yeah, it's been fantastic. I think we got a lot of support from a lot of different people. What did we do? We did a number of live streams. Well, we did, I think, one live stream, or did you do? You did two of them. I did one of them, and then we had other team members do other live streams, and we got a lot of support behind those. So it's been really good. Thanks everyone who has donated or just supported our channels over this period or the live streams. It's been good. It's always fun to do something like this, I think.
Yeah. No, well done. Well, yeah, it feels so weird having a clean-shaven top lip again.
It does. Yeah.
It feels nice though.
Yeah.
I much prefer it.
Yeah, I do.
I don't know. It's given me, I don't know, people that actually have mustaches. I'm like, oh, geez, how do you guys do it? Oh, I did not like having that on my top lip. But anyway, back to normal.
Yeah, I didn't mind it, except that it's just like that it was so unimpressive. Like if I could grow a really thick mo, then maybe I would feel more comfortable leaving it. But
yeah, I mean mine wasn't particularly impressive. It was just ginger, which made it stand out. So people were like, oh, Mo. Anyway, Movember's all done and dusted. Thanks to everybody that donated too.
Yes, thank you.
Yeah, really appreciate it. And it goes to a good cause. So yeah, well done, Hamish. Well done, Team Margin of Safety, and well done to you guys that supported us. We appreciate it. All right, where should we start, Hamish?
We've got to start with this Fed story because this is just hilarious.
Start with Fed. All right. So headline here. Powell lays groundwork for faster end to stimulus as inflation outlook worsens.
Shock. Horror.
I think, correct me if I'm wrong, but I think that I heard somebody talk about that recently. In fact, I think it might have been us last week on the podcast. So it's pretty funny. We were talking about exactly this last week, and pretty much exactly what we said actually happened. So let's have a look here. This is a Wall Street Journal article. It says Mr. Powell during a Senate hearing on Tuesday said it would be appropriate for the Fed to consider accelerating the reduction of its asset purchase stimulus program at its meeting on December 14th/15th. His remarks suggested the Fed is pivoting from being more concerned about nurturing a faster labour market recovery toward being more anxious about keeping prices from rising higher.
Such a funny word, pivoting, isn't it? It's like such a calming way of saying, whoop, we've changed our tune.
We have changed it. We are just slightly pivoting.
Yeah, we're not
interestingly,
wrong.
He also said that he's retiring the word transitory. And the reason for retiring the word is because he didn't believe people were understanding his true meaning behind it.
Exactly right. He wasn't wrong. We're just
didn't understand.
Changing directory just a little bit. Just to the left, just a little bit more towards what should be done.
I'm not saying transitory anymore, not because I was wrong, but because you didn't understand what I meant. It's pretty funny. I mean, we saw this coming a mile away. There's been just hints here and there, consistent hints that this was going to happen. But it makes sense why Jerome Powell is saying what he's saying, because he doesn't want people to worry, really. I mean, a big part of inflation is the psychology that things are that inflation is happening. The more people think inflation is happening, the more inflation will happen. It's a vicious cycle. So it makes sense that he was just trying to be the cool, calm, collected guy, authoritative figure that kind of said, no, it's okay. But now he's saying, okay, maybe it's not so okay.
Yeah, he's being very, very cautious with the way that he's going about this, and using, the strategy of we're going to start talking about this, or we're thinking about doing this.
You have to be very, sorry, you go.
No, that's all.
Oh, okay. Yeah, I just remember back to when I was doing the research on the Zimbabwean inflation, and they actually made inflation illegal for some period of time. Like you weren't allowed to raise prices, but because people were inflation was just in people's brains at that point, it didn't stop anything. Like there was still, they were changing the price of bread 3 times a day. Like they would get 3 price changes a day. It would go up in price.
You know what? We're just gonna make the recession illegal. It's illegal to be in a recession.
Yeah.
You can't make inflation illegal. That's just not how it works.
Yeah, I mean, if you control your currency, you can try. You can make it illegal for people to raise prices on goods and services, but it didn't work. I think people just started using US dollars instead because because obviously, the Zimbabwean government doesn't have any control over US dollars.
Yeah, I mean that's just not a good strategy. I mean, even if you can enforce people not raising prices, you're just going to have shortages because if people have the money and they're wanting to bid up prices because there's this huge flow and dilution of currency. Then just not raising prices in that case will just cause a shortage. It's why in places like New York, for example, where they have ceilings on rent, there's a massive shortage of available properties there, right? In New York City, because they put a ceiling on rent because they don't want it to be insanely high, right? Because there's so much demand for people to live in that city, right? They can put limits on rent, but the outcome is that there's just a limit. There's just a limited amount of properties available for rent now. So
that's interesting. Yeah. And then it's just like, well, it's like it doesn't exist anymore.
Yeah. And I mean, it's cheaper, but it's just available for less people.
But it's not available. Yeah, right. That's interesting. Yeah. So loaf of bread's cheaper, but you actually can't go out and find a loaf of bread to buy.
Yeah.
Kind of thing.
Yeah.
Interesting.
Yeah.
But anyway, back to the Fed. The quote here was from Jerome Powell. He actually said the risk of higher inflation has increased. So that's, I mean, all honesty, like we know that that's true, but it's surprising to actually hear him say it like that now. Yeah, he's being a little bit more honest about it, isn't he?
Yeah. It's It took him a while to get there. What are we at? 6% annual inflation. It took him a while, but yes,
he said here, to get back to the kind of great labor market we had before the pandemic, we're going to need price stability, Mr. Powell said. Quote, and in a sense, the risk of persistent high inflation is also a major risk to getting back to such a labor market. He also noted the economy is very strong and inflationary pressures are high, and it is therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases perhaps a few months sooner. Several of his colleagues had earlier said they were open to such deliberations at the Fed's next meeting. That's kind of what we were covering over the past couple of weeks.
You know what? The other thing we mentioned last week was Biden just re-elected Powell, right?
True.
And I spoke about last week, wouldn't he wait until after he was re-elected to say something that Biden might not be too happy about? I think that literally happened last week. So
conspiracy theory.
Well, I mean, it's not really. It just makes logical sense. I mean,
it does.
He probably wanted to not, shake the boat too much, rock the boat too much before he confirmed that he was getting re-elected, and maybe now he can speak a little bit more honestly about what's a rational approach to take given the current inflation pressures. So.
That's actually smart, because he wouldn't say anything. He to make sure Joe Biden's happy, he'd just keep saying that, we'll keep printing money. You want some more money? We'll keep printing, print. Because Joe Biden's spending it pretty quick. Yeah. So that makes sense. Now that that's all settled, then he's maybe actually speaking his mind a little bit more, as opposed to protecting his position. So there you go. What else did it say? Mr. Powell's comments provide a strong indication the central bank is readying such a move. Yep. Interestingly, he also admitted that the Fed was wrong about their predictions on inflation. Quote, "What we missed about inflation was we didn't predict the supply side problems. And those are highly unusual and very difficult, very non-linear. And it's really hard to predict those things," he said. So there's some truth in that, isn't there? I certainly wouldn't have picked it. It's kind of strange that that it's on such a delay. Like the worst supply chain. Like I feel like there's been more vaccines administered than ever before, right? In right now, but somehow right now is when the supply constraints are at their worst. Yeah. So,
well, I think we're just seeing more and more of the world go back to normal, and that means that there's just this huge ramp up in demand, and people are feeling every day. People feel a little bit more confident to do things like make long-term plans, right? Book things or buy expensive things that maybe they were holding off because they just wanted to protect their, they were uneasy about their job future over the next year or so if things get worse again. So I think people are getting a little bit more comfortable every single day, and clearly it's the case that the increase in demand is not being met with increased supply, and now we've got these huge supply side problems. But I mean, he's right. I mean, those issues are not something that you can just mathematically calculate. Oh, this is the pandemic effect. Oh, we're going to have supply side issues. It's messy, right? It's not a perfect formula or anything. So. It makes sense. And it also makes sense that he's wanting to lean, or has wanted to lean, on the side of hoping things get back to normal themselves, because that's the best thing for the economy. If things just fix themselves and he doesn't have to raise interest rates or tighten monetary policy, then that's the best thing for the labor market. It's the best thing for the economy, for businesses, for individuals. So it makes sense that he's kind of waited for as long as possible. And maybe now he's seeing, okay, things are just not getting better. They're actually getting worse. So now we have to step in and stop it from getting out of control.
Yeah, makes sense. So my last point here is that if you see some turbulence in the market around December 14th or 15th, you know why.
And we've seen a little bit over this week as well, just on the back of this news. I mean, I think there was a day on, I think Monday, the US market was down 2.5% or something, which was quite a bad day. We'll see. But I guess since he's saying now that we're thinking about it, I guess we can probably infer that there's a good chance that at the December 14-15 meeting we will see them ramp up.
It's just foreshadowing, isn't it?
Yeah, exactly. But we will see.
Yeah, there you go, Mr. Powell. There we go. Exactly what we predicted last week, Hamish. Exactly. All right. Where to from here? What you've been looking into this week? You've been looking into Jack Dorsey. What's he been doing?
Yeah, Jack Dorsey, founder of Twitter. He's stepped away from the company finally.
Oh, has he really?
Which and it's been. he's been kind of in a precarious situation for a while. I think if you remember back to October last year, there was a large investor in Twitter who was trying to force Jack Dorsey out. He was quite frustrated, or the company, I should say, the investment firm was quite frustrated that he continued to be the CEO of two massive companies, that being Twitter and Square, both of them, multi-billion-dollar companies. So yeah, there was that last year where he was potentially going to get forced out. They reached a deal and he wasn't forced out. But fast forward a year and he's stepping away. So earlier this week, Jack Dorsey released a statement on Twitter. It was just basically a big email that he wrote to all his staff and he shared it on Twitter. And in there, he said that he will be stepping down from the CEO position effective immediately. And then he'll actually also be leaving the board entirely by May next year. So,
so he's out.
He's out. He's gone completely. I mean, some things that often when a founder steps away from the chief executive position, they'll maybe be the chair of the board. So they're not in the day-to-day management team anymore, but they're on the board of directors. So they still meet, maybe every month and make very, very top-level decisions about the executives.
Yeah.
About the compensation, for example, and the strategy and vision for the company. But he's not doing that. And then, the next thing is sometimes a founder will just stay on the board, right? Maybe they'll just be a member of the board. So they're not the chair, they're not leading it, but they show up maybe 12, 14 times a year for meetings and they get a vote, right? They share their opinion. But he's not doing any of those things. He's actually going to be out of the company completely. In his statement, he actually explained why he's leaving the company entirely. So the first thing he said was, there's a lot of talk about the importance of a company being founder-led. Ultimately, I believe that's severely limiting and a single point of failure. I've worked hard to ensure that this company can break away from its founding and founders. So Dorsey believes that it's not critical that the founder remains in the company and that actually it's good for the company to be able to stand independent from its founders eventually. And then he also went on to say, why not stay or become chair? Meaning chairman of the board. He said, I believe it's really important to give the new CEO the space he needs to lead. And back to my previous point, I believe it's critical that a company can stand on its own, free of its founder's influence or direction. So there you go. I don't know how to kind of read into that. I mean, I personally really like companies that are founder-led because often the founder's vision is what you want to see their vision go to full fruition, to as big as the company can be. So the way I read into that is maybe Jack Dorsey or maybe what Twitter is now is not the company that Jack Dorsey envisioned when he created it, and he no longer has the vision to guide it to where it's going. I don't know. What do you think?
Yeah, or he's lost the passion for it. Yeah. I mean, he's copped so much criticism over time that maybe he's just kind of done with it. He's, you know what? I wanted to create something amazing. I think I've done that, but all I seem to cop is criticism. So I think I'll just walk away. Yeah. Maybe he's just fed up. But yeah, I definitely agree with you because I definitely like to see founder-led companies because the companies we look at, they're huge. And if they're founder-led, well, just the fact that we're looking at these big companies and they're founder-led shows that the founder knows what they're doing because they've started this company and they've dragged it up to this amazing point that we're now looking to invest in it as publicly traded. It's a huge company like Twitter or like a Facebook or any of the other companies. So it definitely. From an investor, you're like, wow, okay, well, this company is the CEO's track record, is the founder's track record. You can see that they've done a great job by the fact that this company is now huge.
yeah, exactly. And I wanted to see, sorry, go on.
No, that's all I was going to say. You keep going.
Yeah, all I was going to say was that was kind of my initial thoughts, and I actually wanted to see if there was any data to support, founder-led companies actually being better than non-founder-led companies. And there was I found a study from Harvard Business Review that did a study of founder-led and other companies in America from 1990 to 2000 from 1990 to 2014. And companies during that period that had a founder that was either the CEO, the chairman, or just on the board of directors, so a founder that was heavily involved in the company, basically, their stock prices performed 3.1 times better than other companies over that period. So
yeah, there you go.
Maybe the stock prices don't fully reflect the actual underlying businesses, but that just shows you that the performance of shares, at least in companies where the founder's heavily involved, was far more over a very, very long period. So yeah.
No, I like founders. You love founders that have a track record of success, and they still cling on to it. I can't remember what book this is from or who said it. The Big Hairy Audacious Goal. Can't remember who said that, but it's in some famous book, I think. Because usually if they have that, they're just hell bent on continuing to improve their company until they achieve that goal. It's like the classic example is Elon Musk. He's got big goals. He wants to help transition the world to renewable energy through Tesla. That's number one goal. Then in SpaceX, he wants to get us to Mars. They are two enormous goals, but he's the type of person that is so driven towards those goals. He will keep working his life away to try and achieve those goals, which, as a Tesla or SpaceX shareholder, is good because he cares about it so much that he's not going to he's not going to ever wake up one day and be like, you know what, no, I'm just going to take holiday. I don't really care anymore. Maybe I'll just maybe I'll step down as CEO, sit on the board, just get fat paychecks for the rest of my days and not really do anything. That's just not going to happen. So
I'll just sit on the board, direct all the funds from the business into share repurchases and dividends that I'll get because I own 10% of the company. And
I'll just point fingers. You do this, you do that. Yeah. What do we think? I should be paid more? Yep, I agree.
All in favor? Great.
Yeah. All right.
See you next month, guys.
Founder-led businesses are very important. But the one thing I'll say is that I do agree with Jack Dorsey is that if the founder loses some sort of passion, if the founder's not in it like they once were, then I think that they should step away and let somebody else who is energized and is passionate, let them completely take over for the next phase of growth.
Yep. Couldn't agree more. Yeah. Something I found out today, I probably should have known this. Thomas Edison was one of the founders of General Electric. Did you know that?
Really?
I did not know that. I was reading an article today about General Electric, and it started off with a quote about Thomas Edison. Then it went on to say that he was one of the founders. I was like, what?
Weird. General Electric, that is insane. How old is that company?
Yeah, I looked it up. It was founded in 1892. So, but yeah, I don't know. Wow. I just never put two and two together, but it makes sense now that
it does make sense.
That I think about it.
Yeah.
Yeah. Anyway.
Wow.
I just, interesting.
Just a side note, isn't General Electric now splitting themselves up?
Yes, they are.
Into like 6 different.
Yeah, I can't remember. I haven't been following it. I think they were splitting into they've sold a lot of their businesses. I mean, they're just a business at 100 years old, and they've gone through that process that a lot of mature businesses do, which is they run out of ways to grow, so they just take on debt and use that to fuel higher returns for shareholders. And now they're seeing the back end of that, which is the business is declining and they still have these huge debts that they need to somehow reconcile. So, we're really seeing the back end of what I expect to see in businesses like, I don't know, let's say like Starbucks, for example, where they're just in the process of loading up on debt. And they can do it now because their business is still growing. General Electric's right at the end of their life.
So do you reckon this is one of those plays where they just try and put the profitable companies together and put the unprofitable parts of their business in another and let one die and one flourish? Or
honestly, I haven't.
Because some companies don't do that, don't they? They just put all of the junk into one spot and let that fail, and put all the good stuff into one spot and let that thrive.
Right.
I don't know. Maybe they're doing that.
Yeah. Honestly, I haven't been following it closely enough to know. All I know is that they've sold parts of their business to pay some of their debts, and they've split some segments. But I haven't been following it closely enough to know exactly what their strategy is.
But speaking of companies that are on maybe going downhill, SpaceX on the risk of bankruptcy? What the heck?
Yeah, what happened there?
Did you see this?
No, I haven't seen this at all.
This took me by surprise. It definitely caught me with the headline. That was pretty much the headline. SpaceX at risk of bankruptcy. It says here, Elon Musk is angry with the progress SpaceX has made in developing the Raptor engines that power its Starship rocket. Starship is their next generation rocket that they're currently working on. You've probably seen it in the news or on their YouTube channel. Their big, fat, chunky rocket that's going to take us to the moon and then onwards to Mars. The interplanetary transport ship, as it was once called. But problems with the engine production that is powering that rocket. He described a dire situation the day after Thanksgiving in a company-wide email, a copy of which was obtained by CNBC. Quote, "The Raptor production crisis is much worse than it seemed a few weeks ago," Musk wrote. Quote, "We face genuine risk of bankruptcy if we cannot achieve a Starship flight rate of at least once every 2 weeks next year," Musk added later.
Wow.
Musk wrote in the email that he planned to take the long Thanksgiving holiday off, but after discovering the Raptor situation, Musk said he would personally work on the engine production line through Friday night and into the weekend.
He's crazy. He's got to be one of the most involved CEOs
definitely.
in any company. It's so impressive to see that, when the company needs it, he'll be there, not just working as an executive, but getting his hands dirty, it's crazy to see.
Yeah. Yeah, it's pretty interesting. You're definitely right. Like, I remember he was talking about the Dragon capsule, the capsule that goes and docks with the ISS, and it uses some LiDAR system to line itself up and then dock. And someone asked him, like, "Oh, how do you guys even think to make that sort of stuff?" And it turns out that Elon just made that himself. Like, he was the person that made the LiDAR automatic docking system between Dragon and the ISS. I mean, it's just so you don't think that, the CEO of Ford is writing the new software for the Ford cars, or is in there working on manufacturing efficiencies on the assembly line itself or something like that. It's just he's just different. He's a special breed. He's very, very involved in his companies. But I think that's a good thing. I mean, it probably is going to drive him insane one day. Probably lead him to an early grave, to be honest. But
he's crazy. You do wonder how long you can work like that for, just constantly, because
true.
He's been going a while. I mean, even just with Tesla, right? He's been going for what, 10
since 2007 or 8 or something like that.
Right, so over 10 years. Wow. Okay.
I think maybe even more than that. I can't quite remember. The Roadster when was the Tesla Roadster? The Model S came out in 2012, and then the Roadster was a fair few years before that. So maybe it's even longer. I'm not quite sure. I'd have to look it up.
I'm not sure. Wow.
Yeah, crazy. So he's not happy with these Raptor engines not being produced very quickly. He says, quote, "We need all hands on deck to recover from what is, quite frankly, a disaster." That's pretty scathing, isn't it?
Oh my God.
Yeah. Musk wrote on November 17th that SpaceX will hopefully launch the first orbital Starship flight in January or February, pending regulatory approval by the FAA, as well as technical readiness. This is another interesting part of the article here. Interestingly, Elon has been saying a key part of... Oh, yeah, I'm reading this like an article when it's actually just what I wrote down. It says, interestingly, Elon has been saying, a key part of the profit for SpaceX in the future has been Starlink. But what was interesting is that recently he's just revealed that Starlink actually relies really heavily on Starship. Which is pretty crazy. It says SpaceX has raised billions in funding over the past several years, both to fund Starship and its satellite internet project Starlink, with the company's valuation recently hitting $100 billion. But while SpaceX has launched about 1,700 Starlink satellites to orbit so far, Musk said the first version of the satellite is financially weak. The company has been steadily growing Starlink's user base, with about 140,000 users paying for service at $99 a month. Earlier this year, SpaceX outlined improvements for the second version of the satellite, with Musk saying in his email that V2 is strong, but can only be launched effectively by Starship rockets.
Wow.
So that's interesting because everybody was saying, don't worry, SpaceX will make money, but it's going to make money because of Starlink. And now this is clearly saying, hang on, for Starlink to make a lot of money, we need Starship. So it's a bit of a catch, isn't it?
Yeah, man, that's a complicated business to be running. I mean, even
absolutely.
I mean, you just think back to what Warren Buffett spoke about, how the auto business, when it was first being created in the early 1900s, and how many of those businesses just failed. You know, and you think of that as a capital-intensive business that's really hard to get off the ground. And then you think about the space industry, and you'd have to imagine there's going to be, you know, hundreds, if not, well, first we'll see hundreds of businesses that just try and build something in this space and can't succeed, because that's just the nature of highly capital intensive businesses that are, you know, on the bleeding edge. Most of them are going to fail, unfortunately. A lot of them will have, you know, strong promise and a vision for what they can do in terms of building satellites and going to space and doing all of these projects. But it's difficult even for the great Elon Musk.
It's a difficult industry because it's, yes, what you said, capital intensive. But at the moment, if you want to be a space launch company, then the only way you can really generate revenue if you're just a space launch company is just by taking up satellites.
Right.
So you just have to that's like your only business. You take up satellites and, you know, you make a tiny little profit off of each flight. So not Tesla, SpaceX, I think is now, I mean, in the future, space transportation will be huge because we will be taking stuff to the moon. We will be taking stuff to Mars. There will be this constant stream of ships going to Mars. So it will be huge in the future at some point, but at the moment, it's just not. So I can understand SpaceX are doing the best they can because they've realized that, hey, we have our competitive advantage is the fact that our rockets cost a lot less to fly because they're reusable. We don't have to build a rocket every single time we do a launch. We can reuse them, refuel them, and go again. So now they're trying to innovate and figure out how can we generate revenue. What are some other revenue streams we can generate because we have a low cost launch advantage? And obviously here, let's make our own mini satellites and we can fly a lot of them up quite cheaply, and the economics of a satellite internet business can work out, and then we can use that to fund this. But obviously what we were just saying before, now they're in a bit of a pickle because this satellite internet business is reliant on the next generation of rocket, which is struggling at the moment. But yeah, definitely a hard industry. Definitely it's just so capital intensive and there's so little room for error. Especially if your rockets don't land. If your rockets don't land, if you have any sort of launch failure, if your rocket goes up and just doesn't complete its mission, has a mid-flight incident, then that's millions and millions and millions of dollars that just burnt up.
Yeah.
It's just, start again. Sorry. Hard industry. Anyway, I think that's enough about SpaceX. Good luck.
Good
luck.
They're just still a straight private business, right? They haven't been captured into a SPAC or anything like that at the moment.
Nah.
Well, you know what they need to do.
Private. That's what they need to do.
They need to IPO.
They
do. They need to pull a Rivian 2.0, launch, $1 trillion valuation, probably.
Yeah,
one or two, right?
At least.
Yeah. And then, raise it $100 billion and then you're sweet. Done.
Yeah. Heads is 1 trillion valuation. Tails is 2 trillion.
Yeah.
All right. It's a 2 trillion valuation. Let's go. Yeah. Pretty crazy.
Yeah.
Good luck, SpaceX, because, geez, I'd love to see them succeed in the long term.
Yeah.
Wow, that would be great.
I never like to see companies like that go out of business. It's unfortunate, but hopefully they don't. Fingers crossed they can get maybe they'll get some more private funding. I don't know. Who knows?
Yeah, probably. Anyway, we've had our little intermission from our Jack Dorsey segment.
Oh, yes, we're back.
We're back because there's more.
There is more. Shall we? I'll continue on with the replacement for Jack Dorsey, and then I've got a little bit of other news around Square, which is Jack Dorsey's other company. Everything's.
Did I cut you off before you'd even finished your last story?
Yeah, I was about a quarter of the way in, and then.
Oh, what? Oh my gosh, I'm so sorry.
No, it was actually not a bad spot to have a little bit of a break. But I got to talk about.
I'm so
I got
sorry.
to talk about who's replacing him. He's
up.
not just stepping down and letting the company run itself. There's
It's true. I probably should have read ahead and seen that there. But anyway, my apologies, Hamish.
It's all right. So who's replacing him? Well, the person who's replacing him, and I'm not going to pronounce his name right. I'm going to try my best. Parag Agrawal, I think, is the pronunciation. So he's been at Twitter for more than a decade. So this person's not new to Twitter. And then they've been the chief technology officer since 2017. So that's kind of the history of the new CEO. And he's going to have a tough battle. Twitter actually set their first ever public long-term goals for revenue and users this year. So they set a couple of goals. One was that they want to hit 315 million monetizable daily active users by the end of 2023. That's up from the 211 million today. And they also want to double their revenue by in the year 2023. So a couple of goals for the new CEO, and it kind of makes sense that they set those goals for the first time this year. And we're seeing a new CEO that tends to kind of go hand in hand, set some new goals, change of management, see what the new management team can do. So that makes sense. And Dorsey will continue to be the CEO of Square, which is the other company he leads. Or what I should say is he'll continue to be the CEO of the new name that Square has changed to this week. Square is now Block.
What the heck?
Square is now called Block.
It's gotten so big that the square has turned into a cube. So they have to call it Block.
Yeah.
Well, yeah. That's just okay. Sure.
Is
that because they want more? They want to seem more like a crypto thing? Because Jack Dorsey's well into crypto, isn't he?
Yeah, exactly. So
they want to play off of blockchain.
Exactly. So the the name change comes as the business pivots. Let's say its focus. Pivot. Great episode. Pivots its focus to technologies like blockchain and expands beyond its original credit card reader business. So Square, for those who are unaware, basically started out as an in-person payments business, and they had this. Their first product was this little square that you could plug into your phone, and it was a little card reader. So it basically meant you no longer, if you're a small business and you take in-person payments, you no longer needed to get a whole system with a cash register and a whole, I don't even know what you call it, like a point of sale device, I think it's called.
Yeah.
You could just stick this little thing into your phone, and maybe you sell things at a market, for example. Super easy. You just have this little portable thing on your phone, and you can take card payments. Yep. Super easy. Great business. And then they've expanded from there into peer-to-peer digital banking. They do small business lending. They acquired Afterpay, and they also offer crypto and stock trading now. So they do a lot of different things now, a lot of them in relation to cryptocurrency and the blockchain, hence the name change to Block. And maybe I'm biased. Maybe I'm biased here, but Block is a worse name change than Meta. Come on.
Yeah. If you are leaning into blockchain, I can understand it, but it's essentially like it's the same thing. Square, Block. I mean, when I hear Block, I think like cube. So cube's just made up of squares. So I don't know. It feels like it's just like the same thing.
Yeah.
I don't know.
I just like Block. Really?
Yeah.
Come on, like.
Yeah.
I don't know.
It's like Facebook changing to like Book of Faces.
Yeah.
Or something.
Yeah.
Just like, wait, isn't that the same thing? Square, block, yeah, unnecessary, but whatever.
Anyway,
It'll be like the tech bubble. You know, everybody just wanted to say that they're an internet company. So, and then as soon as they did that, then their stock prices shot up to the moon. So now everybody just wants to say that they've got something to do with cryptocurrency. So maybe this is just strategic. He's going to change the name to Block, and the stock price will just go up 50% because somebody thinks it's got something to do with blockchain.
There you go. There you go.
No. Have you ever looked into Square? I've honestly not looked into it, but I hear a lot of people that I follow that I respect their opinions on stocks because they actually do their research. A lot of people seem to really like Square's business.
Right.
I haven't looked into it before, though. It's probably still a case of something that's horribly overvalued if I had to take a guess at it. But
yeah,
have you ever looked into it?
No, not really. I mean, they're growing at an insane rate. I mean, they're doing 10 billion in revenue, or they're doing 16 billion in revenue now. 10 years ago, they were doing 200 million. So they're growing at a massive clip. They've just become profitable in the last couple of years. Yeah, I mean, they're a price to earnings ratio of 180. So,
right. Yep.
You know, they're quite high. I think that's right, actually. Maybe that's not right, but I'm just looking at something now. Yeah. Anyway, so yeah, not a business. I mean, it's not a business that's been profitable long enough to be one that I'm particularly interested in, but they're certainly heading in that direction. Just still a young business, I think.
Yeah, interesting.
Yeah, so the name change will come into effect on December 10th. And Jack Dorsey, what did he say on it? He said they're doing it to acknowledge the company's growth and to create room for future growth. And yeah, I think that's just about it. Yeah, there you go. Block.
It will be fun to say. Today we're going to talk about block stock.
Block stock. Oh my God. That's awful. We're never talking about this company ever again. We're not talking about it.
Are you buying block stock?
I refuse to say block stock again on this podcast. That's the last time. That's it.
That's the one and only. All right, you can keep saying Square.
Thank you. Yeah, I am.
There you go. There you go. Is there anything else in that? That's just about it.
Yeah, that's it. You've been very cautious, trying not to. Don't cut.
Sorry,
you being cautious. You don't want to cut me off again. You don't want to.
Yeah, I do. So I do apologize. On that, I thought we were done talking about Twitter. You should have just cut me off and said, yeah, that was a nice segue, Brandon, but guess what? We're not done talking about Twitter.
Hey, come back.
yeah, you could come back around. I totally just cut. I thought you were done.
Right.
Anyway,
it was a good
my
segue.
apologies, mate.
It was a good segue.
My apologies.
No,
you just wanted to let the segue run.
Yeah.
You're just like, you know what? Brandon's garbage at segues normally. He's actually got one here.
No, you're not.
I just let him go. You come up with some good segues sometimes. It's an art, isn't it? It's an absolute art.
It's very rare.
My desk is going up. Come back down. Must have flicked the button by mistake. All right, should we move on to the next news story?
Yeah, tell us about the most expensive cities.
Yeah, this is an interesting one. I mean, it's not something that's going to change the way you think about the world or anything, but I was very surprised. So apparently there's this study by the Economist Intelligence Unit. They do this study twice a year, and they look at the most expensive city to live in. They track 200 products and services across 173 cities.
Right.
And I don't know, when I think about expensive cities to live in, what kind of cities spring to mind for you? Expensive to live in?
Sydney.
Sydney,
Melbourne.
Yeah, like New York.
Yeah, true. New York.
Los Angeles.
Like LA, yeah.
High taxes. Yeah, but it turns out, I'll just tell you the number one spot. Number one most expensive city to live in at about this time in our history is Tel Aviv, Israel.
Oh, okay.
Who would have thought?
Wow.
Who would have thought? I certainly would have guessed that. Wouldn't have guessed that.
Yeah, no, I definitely wouldn't have. No.
Tel Aviv, Israel is now the most expensive city to live in, according to biannual report by the Economist Intelligence Unit. The EIU said Tel Aviv rose up the rankings mainly because of the Israeli currency, the shekel.
Right.
Because the shekel had soared, buoyed against the dollar by Israel's successful COVID-19 vaccine rollout. More broadly, the EIU said that the inflation rate of the prices it tracked, as I said before, it tracks 200 products and services across 173 cities. The inflation rate had risen by 3.5% year on year in local currency terms to December 2021, up from just 1.9% in 2020. It said this represented the fastest pace of inflation in its index over the past 5 years. So I guess consistent with what we're seeing around the world. But what really surprised me, I mean, this is kind of like, okay, cool story, bro. What's interesting is that New York, first of all, I'll start with Los Angeles. Los Angeles came in at number 9.
Wow. Okay.
New York came in at number 6. So there are 5 cities around the world that are more expensive to live in than New York.
Right.
And I'll give you guys have a listen. Have a think rather. Have a listen. You're already listening. Have a think. What would you guess? You got 5. We've given you 1, which is the city Tel Aviv in Israel. There are 4 others. Do any others spring to mind? Any that you want to take a pot shot at?
Oh, me. Wait.
Yeah, you.
Oh, I've already looked at it, so I can't.
Oh, you've already looked at it. All right. Well, that's
actually, let me guess. I just get them all right.
All right. Well, that's taking the fun out. I might as well just say it. So 5th on the list is Hong Kong.
Okay.
4th is Zurich in Switzerland. 3rd is Singapore, and 2nd is Paris.
Okay.
So there you go.
Wow.
I probably would have guessed Singapore. I don't know why, but I just always hear people saying that Singapore's really expensive.
Right.
I think in Singapore, if you want to drive a car, you have to pay $75,000 a year.
What?
To own a car, I think.
Really?
Maybe that's zoned to like just the city.
Oh my God.
But I guess there's not really too much to Singapore. It's not very big, is it? So maybe it's the whole country.
Yeah, I guess people just take public transport then. I guess it's got to.
Yeah, I was talking to my mum who's got a friend who lives in Singapore. They said, their parents living in Singapore, if they want to own a car, it costs them $75,000 a year to register it.
Sheesh.
Yeah, so clearly they don't want people driving cars there. But yeah, there you go. So I guess I could have guessed that. But Zurich, Hong Kong makes sense, I guess. Hong Kong's similar. Yep. Paris, I always knew Paris was expensive. I didn't know it was that expensive.
Yeah, very interesting. I'm surprised there's no Australian cities on there, to be honest.
Yeah,
really thought Sydney would be on there, but...
Yeah, no dice, no deal. So yeah, Tel Aviv, Paris, Singapore, Zurich, Hong Kong, New York, Geneva, Copenhagen, Los Angeles, and Osaka in number 10.
Wow.
So there you go. Bit of an interesting story. Story, non-story. Nothing really to talk about, just interesting to kind of have a look.
Very good.
All right, should we do a couple of Q&A questions?
Yeah, let's jump into it. We've got to get through this growing pile of questions that we
true.
continues to grow every single week. We were getting on top of it for a little while there, and then I think we had a couple of jam-packed weeks, and we only did like one question at the end or something like that. So
I think if we don't average 3 a week, then we end up falling behind.
Yeah, it grows
because we end up getting like 3 or 4 each week.
Yeah.
Anyway, where should we start? You pick.
Where should we begin? I don't know. I guess we'll just start with
maybe someone down here. Oh yeah, go with the big one.
Okay. Love the podcast. I've been working towards paying down a high interest debt for the last couple of years and have just hit break even. I'm really excited to start investing now, but I'm looking at buying a business and taking on some debt to do so. Just wondering your thoughts on paying down debt versus investing. Would you invest and pay down debt at the same time and start the snowball now, or pour it all into paying down debt and switch to investing afterwards?
Yeah, this is an interesting one. that a lot of people face, because a lot of people, they want to invest in the stock market. They've also got, say, mortgage. Mortgage is obviously a big debt. So the way I see it is, well, mathematically, it comes down to the interest rate. And you got to balance, what can I get in the stock market versus what can I get paying down my debts. Obviously, if you've got like massive credit card debt at something like 12, 15, 18% or something like that, then yeah, for sure, pay that down, because chances are you're not going to get 12, 15, 18% positive or more in the stock market. And the other way to think about it is that you can lock it in. Like, you can absolutely be 100% sure that if you pay down your credit card debt, you are getting rid of that. You are, I guess, in a weird way, you're generating that return by getting rid of that debt, and you can get rid of it. Whereas if you put money in the stock market, you hope you can do that, but you don't know you're going to get that return. Yep. So something to be said there. But generally speaking, I think at the moment you would probably say, if you had a mortgage at a very low interest rate, you could argue that the long-term average return of the stock market would be higher. So you're going forward faster than what the mortgage is pulling you back. But at the same time, it comes back to what I just said before. If you're paying down, say, a mortgage or a debt, you're clearing that away. You don't know anything in the stock market. We can look at historical numbers, but we don't know that we'll get that in the stock market. So that's kind of what I think about when people say debt, investing, what should I do, mortgage, buy some stocks. I don't know. Do you have anything to add on that?
No, not really anything to add. I think the only other thing I would say on that mortgage point, you could think of it like this. Do you either pay down, if you had a lump sum of cash, for example, do you pay down that mortgage, or would you use that money to buy another property, right? What would get you a better return? If you pay down the mortgage, maybe you'll get maybe 4% guaranteed by paying off that. Can you get more out of leveraging that money and investing in a new property or two new properties or something like that, and getting mortgages on those? And the answer is, you're probably going to be able to generate a higher return on that property, on a new property, than just paying down the mortgage. So yeah, with low interest, low secure interest on debt, then it makes sense to be slow on paying that back. But yeah, anything that starts to get close to what you should expect to get out of investment opportunities, then you want to be taking advantage of the fact that you can get a guaranteed return basically by paying that down, by no longer having to pay the interest on that debt.
Yeah, well said. You said that much more succinctly than I did, as per usual. All right, let me ask you this one, Hamish Hodder. What steps do you take to educate yourself when you become interested in a new industry that is currently outside your circle of competence? In other words, what is your approach for expanding your circle of competence into new areas? Good question.
Yeah, that's a really good question. It's actually a question I get a lot. I think a lot of people are always kind of interested in, I have somewhat of an interest in this area, but I don't understand the business side of the industry, right? Maybe you're a consumer. There's a lot of talk, Phil Town talks about this, even Warren Buffett, about finding and investing in areas that, maybe you're a consumer in, but that's obviously not just enough. You can't just, if you're into computers, you can't just be a consumer of computers. You need to understand how the business economics of selling and producing computers also works, or whatever it is, right? So how do you do that? Well, my favorite way actually is you can do some, broad industry research just using, Google, and, maybe there'll be books you can find that are, on specific industries. But what I like to do is I just like to read as many annual reports as possible about businesses in those industries. And the reason why is because especially for US reports where in the annual report they explain a lot about the industry, you'll get that, but you'll also learn about all of the different ways that businesses operate within that industry, because not every business will do things the exact same way. The example I use is restaurants, for example. There's franchise models. There's completely company-owned restaurants. There's restaurants where they own the land underneath the restaurant. There's ones where they lease the land underneath the restaurant. There's master franchises where, like Domino's in the US, for example, gives the franchise rights to Domino's Australia for them to be franchises. There's like 2 layers of franchises. So there's so many different ways that a restaurant business can operate. And the same is true for other areas. And a restaurant business is relatively simple. So you can imagine for other businesses, it can get very complicated. But just reading annual reports is honestly where you learn as much as possible. And often each different company in an industry will use different industry research firms to get their industry data. So, in the annual report, they might talk about the size of the industry is this, or the total addressable market is this, and they'll explain where they got that data from. And then you can use those sources and go directly to them and also learn more that way. So that's like the main way that I go about it.
Yeah, I'm pretty much the same. I mean, if you want to look into a certain industry, Google's so powerful. You can literally type in video game stocks, and Google will just give you a straight up list of video game stocks. And then you could even try and find some statistics on, what are the biggest market cap companies in the video game industry. I mean, there'll be a list somewhere on Google. And then, like what you said, I just kind of get the big players. It's usually fairly easy to see who the big players are and who the not so big players are. You can even just look at market cap, I guess. And then just read annual reports. Exactly what you were saying before. Just read. And if you read the annual reports from, say there's 4 big players in the industry, if you read the most recent annual report of all 4, then you'll start to get an understanding of how that industry works. Oh, there's similarities across all 4. You'll understand, okay, how do these companies, how do they monetize? What are roughly their margins? They all make video games. What are their margins? You'll start to get a feel for, how much capital does it take to make video games? All of these similarities will start to pop out at you, and you kind of get a feel for how that industry works. Yeah. And then once you've got that fundamental or foundational feel, then you can begin to identify companies that stand out. Maybe it's some new innovation, or maybe they structure their business differently, or they make money through a different revenue stream, or they've got some sort of economic moat. For example, you can if you looked into social media, I said, what are the biggest social media companies? You probably go, I hear about Facebook and Twitter all the time. Well, if you actually read about them, you'd learn that Facebook is by far number 1, and Twitter really, really struggles. Because you'll also learn, if you looked into all the social medias, that it's really all about the number of users that they have and how many ads you can serve and what price people are willing to pay for those ads. And Facebook excels at all of those metrics. Twitter really struggles. They struggle to grow their users. They struggle to monetize their users, whereas Facebook doesn't. And if you just read across the top 4, these kind of things will just pop out to you. And then the more you read, the more you'll get a feel for each industry. But I think that's the way I do it. Look at the biggest companies, look at their most recent annual reports, and you'll quickly get a feel for what the industry is about.
Awesome. All right. Should we squeeze in one more? Do we have time?
Yeah, let's do one more real quick.
Right, real quick.
Yep.
This question says, Bank of America says that stock funds, ETFs, and long-only funds took in more cash in 2021 than in 2 decades combined. Oh my God. Yeah. What do you think about that?
I'm not surprised by that.
No, I'm not surprised either. But
no, I'm not surprised in the slightest. I can't remember the stats, but there are definitely stats out there that show the investing world over the past couple of decades is shifting much, much more passive. Firstly, there's more people that want to get in, but at the same time, the overarching strategy of the market is turning more and more passive. And you can argue that some of these funds are active, blah, blah, blah. But usually when you dig into those funds, they're mostly packed full of big blue chip companies. So in fact, they're mostly just market tracking as well with slight variations. But But it also doesn't surprise me that the money is flowing into the market right now. And that's just market psychology, because when markets are high, everybody wants to get in because they see that it's going up. When markets are down, nobody wants in because they think it'll keep going down. It's completely screwed up psychology. It's completely backwards, but it's just what happens. That's just the reality of it. So I'm not surprised in this at all. Your thoughts?
Yeah, I'm not surprised at all. The market's a bit of a paradox because when interest rates are so low, you should be willing to invest in the stock market almost at any price, because even a couple of percentage points higher than 1% makes it worth investing to get those extra percentage points, right?
Yeah.
But the why it's kind of a paradox is that psychology drives so many people to flood money into the markets at a rapid rate, and then the return goes away from that.
Yeah.
And then you have a situation where everyone is so wealthy, the economy is so hot that inflation increases, and then those interest rates go up, and all of a sudden you have you're sitting at the top of the stock chart, and you're just like, wow, why am I here when I?
You sound like Ray Dalio.
Yeah, it's a crazy paradox that just happens over and over. It happens in cycles. I am Ray Dalio at the moment. Cycles.
Yeah, the classic thing is, because there is debt, there are cycles. That's what he says.
Yeah, but no, I mean, look, I don't know specific stats on these sorts of things, and I'm not the kind of macroeconomist to try and like calculate when things are going to collapse and what specifically that means.
Mate, I've been telling you next Tuesday.
That's right. No, wait, didn't you say that last week?
Oh, yeah, I think I did.
You said that last week.
Yeah, I'm staying consistent. Next Tuesday.
And that's when Jerome Powell kind of started the beginning of the end. So maybe you're right. No, but these are things just to observe and to understand that, we're never going to know, when to, you can't know when to get in and out, but it is insane to hear like that so much money is flowing into not only ETFs specifically, but just markets broadly. So yeah. Yeah.
All right. Very good. Very good. Thanks everybody for listening. That'll take us through the end. Man, this was a long episode.
This was a long one.
But we made a dent in. We got through 3 questions, whereas normally we only get through like 1 or 2.
Yeah.
So no, well done. Well done, Hamish. We've done our job. Thanks everybody to listening. Sorry about the cutting Hamish. There was a bit, the stories were all over the place this week, so sorry about that. That was my bad.
Fine.
But we got there. Hopefully it was still easy enough to listen to. Thanks always, Hamish. Thanks for joining me, as always. Thanks to ShareSite for sponsoring, and thank you guys. We do appreciate the hour of time that you give us each and every week to listen to us ramble on about stocks and markets and things that we love that not many people do love, but hopefully you enjoy it too. Anyway, thanks for listening, guys, and we'll see you next week.
See you guys.